Now, today was a good day if you are a commodities investor, specifically in uranium. I woke up this morning, one of my stocks was up 30%, and pretty much everyone was up over 10%, many 15, 20%. We're going to be breaking down what is happening in the uranium market, which is about to explode. And it was nice to see those big numbers because if you're a uranium investor, you know when it moves, your stocks move like a tiny little cryptocurrency. And it was nice to, in the landscape of this macro environment that we find ourselves in, to start to see that we're skating on thin ice with supply, demand, and the necessity for more uranium to come online and thus higher prices. Here to break that down is my good friend, Justin Huhn. He is the creator of Uranium Insider. It is the best newsletter out there to understand uranium investing, the macro environment, but also the mining stocks, which is where the money is to be made. Justin breaks all that down. I'm a paying member myself. He's a brand new quarterly option that is very cheap and very affordable that I highly recommend you check out. I'll link that right there down below in the description and pinned to the comments. Now, they did a webinar for paying members recently, really with the theme of staying in there, right? Like what makes Tom Brady such a good quarterback? He stays in the pocket. He doesn't run out. He doesn't get hurt. He stays in the pocket. And it's the exact same thing when you're dealing with mining stocks or anything that's exceptionally volatile, uranium in the upper echelon of that. And now we're starting to see those huge moves. So we're going to peel that back. What's going on? I'll link Uranium Insider right there down below where you can check it out to sign up. And just a shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. That's Vizsla Silver, now on the New York Stock Exchange. So thanks, Vizsla, and thanks, Justin. And I want to thank you for listening as well. If you're new here, welcome, welcome. If you're a returner, welcome back. Make sure you smash the like button on this video, subscribe, bell notifications, what notifies you for new episodes. And Justin, good to see you.
Good to see you, Jake. How are you?
I'm doing good. I woke up this morning and I saw all the uranium stocks were up double digits. As you know, one of our stocks was up at one point, I think it was like 33%, but pretty much everything was up at least 10, many 15, 16, 17. So I just text you right away. What the heck is going on? You want to hop on an interview? So tell us what's going on. I know a lot of big things have been happening that have really kind of started to maybe put the flame to the ignition that was ready to light.
Indeed. Yeah. It's really been just kind of a compounding of fundamental factors over the last, 12 to 18 months. And it's really started to snowball here. It's kind of to the point where you don't really know what's going to set the market off, but something will eventually. And then you have days like today. We've got 20 minutes left of trading in the day, and Cameco is up almost 16% on not necessarily record volume, but far above average volume, trading right at the highs of the day. URA is up, almost 12%. I mean, that's an unbelievably huge move for an ETF. You mentioned that our members webinar on Monday, that was 2 days ago. We do one of these every single month. We go really deep into the sector for 2 hours, and as you know. And Monday's webinar was all about these stacking fundamentals and how volatile the sector can be, how easy it is for it to shake you out. And really, we were pounding the table and encouraging our members to hang in there. The fundamentals will win in the end. And while today is not necessarily time to break out the champagne, it clearly, the market is reacting primarily to some news that came out last night from Japan. So if you want, I can tell you about that.
Yep, let's start there, and then we can talk a little bit about Bloomberg and Big Short and Michael Burry. But let's start with the Japanese news and also why it's significant.
Sure. So I'm sure a lot of your listeners are at least somewhat familiar with the Japan nuclear story. Japan was the second largest nuclear energy producing country prior to Fukushima. After Fukushima, which happened in March of 2011, they shut down all 54 of their reactors. That basically triggered the beginning of what ended up being almost a 10-year bear market That was over almost 15% of global demand was shut off overnight. And Germany, of course, followed suit as well. They shut off half of their reactors over the last a couple of years following Fukushima. They now still have 3 reactors operating, and that's become kind of a global punching bag in a way, because they, against all logic, they're still planning to decommission these plants in December, even though they don't have to. They can easily get fuel for these plants, and their citizenry is paying all-time high energy prices right now. So that's kind of shameful for them. But back to Japan, starting in 2015, they started to restart their reactors. Some of the reactors that had been approved by the federal and local governments had local support. That was really kind of the most difficult hurdle for these reactors to restart. As part of the provision for the restart of any reactors in Japan, all of the local communities within a certain radius, I believe it's 30 kilometers, have to be in favor of the plant restarting in order for them to get approval for it. And so it's taken a long time for public opinion to shift. And now public is vastly majority in favor of restarting nuclear reactors. So since 2015, 10 reactors have restarted of that original 54 fleet. A number of them, I think about a dozen of them, have been permanently decommissioned. And now there's about 33 operable reactors. Well, the news that came out last night from Japan's new Prime Minister, Kishida, he's basically stating they want to restart another 7 reactors by the middle of next year, which would bring the total up to 17. Now, if they do stick with their longer term plans, which is to have nuclear as 20 to 22% of the grid in Japan by 2035, that's another 20 reactors restarted on top of the 10 that are already restarted. So clearly the market seems to like that news. It seems to understand the significance of that news, and it is very significant. And of course, that story just got picked up by everybody last night by Bloomberg. Like you mentioned, Michael Burry, he tweeted out something positive in terms of Japan doing the intelligent move here, restarting nuclear. Got picked up by Zero Hedge, et cetera, et cetera. So now we're seeing the sector just take off on high volumes. And it's about time, because really we've seen positive fundamentals continue to stack on top of each other all throughout this summer while we're in very low volume, mostly risk off trading environment. And that seems to be shifting today, probably marks the beginning of another uptrend in the sector, because we have a very, very strong seasonal period typically in Q4, Q1. On the average year, that's a very strong period for uranium. So the Japan news really, honestly, isn't the sole thing moving this market, but it kind of was the straw that broke the camel's back.
You said their 54 reactors accounted for about 15% of global demand. How does this additional 10 and ultimately that 2035, but I guess let's start with the additional 10 just because we're looking at more shorter term. How does that influence global demand?
So with 10 reactors restarted, if they were to actually stick with what he stated yesterday and restart another 7 by the middle of next year, so that's roughly, let's say, it's about 3 million pounds a year in demand. It's really not a huge amount, but it's significant for a number of reasons. One, the fact that they would actually potentially create new demand coming from Japan, and considering the bear market that we've just been through and how long it's taken for Japan to turn that corner, that's a pretty big deal. B, you estimate that maybe 3 to 5 million pounds a year of Japanese inventory gets sold into the market, and that's unlikely to continue if Japan accelerates the restarts. So it's a supply situation, it's a demand situation, but it's also a sentiment signal situation where Japan, the country with the nuclear accident most prevalent in most people's minds, is turning around and saying, no, we're embracing this. We're going back to it. That's a huge signal. That's a huge signal, because most nuclear bears will cite Fukushima as a reason to not embrace nuclear. In Japan, the country that actually went through that accident and experienced it, is saying, oh yeah, we're going back to this now. So it's a really big signal, globally to any countries that are considering accelerating their shutdowns, probably reversing course on that, or embracing nuclear. And another part of the news coming from the Prime Minister of Japan was that they intend to embrace advanced nuclear and actually do some new builds of SMRs in Japan. So that adds to that demand picture going forward.
I was just in California, as you know, and I was talking with my mom, and of course, California energy already quite high, but globally, you're seeing energy prices increase drastically. And we were discussing uranium and we were discussing nuclear. And I was just painting the supply and demand fundamentals. And it's amazing to just take a very bird's eye view and break this macro environment for uranium down. Because when someone hears it, even if you don't know that much about uranium, you go, oh my goodness. In addition to it being pretty much the only thing that left people on the left side of the political aisle and the right side of the political aisle actually agree upon, which in and of itself is quite interesting. Why don't you give us this macro landscape as kind of a recap? You broke down the recent news of why stocks are up big today with this Japanese news, but give us the whole macro environment from A to Z as a recap here.
Sure. So like a 30,000 foot view. Yeah, no problem. Okay. So nuclear, kind of as you mentioned, with the bipartisan support, at least here in the United States, that's relatively new for the political left to be embracing nuclear. As you probably know, the Inflation Reduction Act that was just passed, that's full of a bunch of terrible provisions, is actually embracing nuclear. So there's a couple of provisions in there that are going to support nuclear with tax credits, and also some general clean energy tax credits within this bill that nuclear will be eligible for. So that's new for nuclear to be lumped in as a green energy and to be able to access these tax credits. This is a really big deal in the United States. It's the largest fleet in the world. So we can kind of start there from a fundamental perspective, in that the largest fleet in the world is likely to see fewer, if any, nuclear reactors coming offline now that were slated to this decade. And we're likely to even see a re-embracing of nuclear via advanced nuclear and SMRs. Interestingly enough, there's a nuclear power plant called the Palisades plant that was just shut down. I believe it was 2 months ago in Michigan, if I recall correctly. The owners of that plant are now saying they might delay the decommissioning of this plant and restart it because these tax credits could help that plant be financially viable again. So that's a truly unbelievable turn of events for a reactor that was shut down with the plan of decommissioning here in the United States to actually come back and be restarted. And so it's the tax credits from this bill that was just passed are already going to start shifting that demand picture. The funding from that bill is sufficient to keep any reactor slated to be decommissioned in the next 10 years online in the United States. So that's the United States picture. Very, very bullish. At the very least, we should see reactor life extensions and fewer, if any, decommissioning plants in the next decade or so. Nuclear, generally speaking, is a growth industry. Most people don't know that. It's actually growing somewhere around 1% to 3% per year, and that's probably on the high side of that range out for the next decade. It's one of these sectors where you have a significant disjunct between supply and demand on an annual basis that has only been able to be facilitated via above ground mobile inventories from an oversupply of the last decade. So you have about 180 million pounds of demand per year. And this year we'll have about 135 million pounds produced of supply. And that's primary supply, not including secondary supply. But the secondary supply story is really the big part of this thesis that has really solidified this year.
So before you get into the secondary supply, so we've got an annualized growth of, call it 1% to be fair. So you've got that growing while you have 200 million pounds used, but we're only mining 135. So you have this supply demand in a negative state, which is what originally, before I understood anything about uranium, that was the first thing I said. This doesn't make a lot of sense considering what 15, 20% of US baseload power supply is nuclear. A lot of countries are quite high. France is what, 70%. You've got, this movement towards less carbon. We know uranium, whether you like it or not, is pretty much the only viable solution to do that. So I foresee this math and I go, I'm not very good at math, but I think that's a negative number. And so just out of my own curiosity, then I started looking into it more. And you're saying this 65 million negative gap has been filled with secondary supply because of an oversupply during the last bull market. So this secondary supply is now becoming significant in what way?
So that 200 million a year, that's really kind of factoring in an estimated secondary demand number as well, coming from financial players like Sprott, right? And so, but the primary usage in nuclear plants is a bit lower. It's 175 to 180 million pounds a year, with the primary production around 135. And part of that gap has been filled by secondary supply. And I know that we went pretty deep into this in our last talk, but secondary supply primarily came from enrichers. So enrichers that had excess capacity, they would sign contracts with a nuclear utility at a certain tails assay. And if they had excess capacity, they'd actually spin that material down to a lower tails assay, requiring less feed. They underfed the centrifuges. That was around 20 million pounds a year of excess UF6 that they could sell into the spot market. On top of that excess capacity that the enrichers had, they could actually re-enrich tails material. So between underfeeding and tails re-enrichment, we're talking 25 plus, pushing maybe 30 million pounds a year. I mean, that's almost 2 cigar lakes, right? It's at least a cigar lake and a half. It's basically one of the biggest mines in the world is secondary supply from enrichers, or has been, okay? Now in this bifurcated market, because we have the bulk of nuclear energy production coming from the West, around 70% of nuclear energy production is in the OECD countries, right? But we have insufficient enrichment in the West. And so it takes time and a lot of money to expand enrichment. The only way for Western enrichers to provide enough enriched uranium for Western utilities is by overfeeding these centrifuges. So what that means is they have to drastically raise those tails assays and have far more feedstock in the form of UF6 or uranium in order to sufficiently provide that enriched uranium out the far end of that process to Western utilities. So what this means is this secondary supply that was around 25 plus million pounds a year, gone. Not only is it gone, but we're already hearing that tails assays have jumped up from about 0.17, 0.18, 0.19 to between 0.25 and 0.3. Now, a jump in tails assays for the enrichers from 0.18 to 0.3 is about a 30% increase in feed requirements. So this shift from underfeeding to overfeeding not only reduces that secondary supply and makes it essentially nil from Western enrichers, but it's requiring more feedstock. And that shift is from a 25 plus million pound surplus to at least a 10, possibly up to 20 or more million pounds deficit. So it's a 35 to 50 million pound swing per year from this underfeeding shifting to overfeeding for Western enrichers. That is happening. It's already happening. It's not theoretical. It's not, oh, this is coming. It's happening now. And so we already know that the Western enrichers have raised this tails assays. That demand, because to put a finer point on this, and this is really important to understand, and you have to understand this stuff to stay in. This is really what we focused on in that webinar, is you have to understand this fuel cycle stuff in order to weather the volatility, because it's so volatile. So many people get shaken out, and you don't want to get shaken out because you're going to miss days like today. Western utilities for the last decade have been able to go directly to the enrichers and buy UF6, right? because of that underfeeding and secondary and tails re-enrichment. You don't have to buy uranium, U3O8 from a miner. You can go straight to the enricher, buy your UF6.
Also affects the price because then they aren't contracting.
100%. Yeah. I mean, you still have, the big utilities will contract for some U3O8 going forward, but with lower tails assays, you require less uranium feed on the front end. And if you can buy the UF6, you don't have to buy the U3O8 and you skip an important step of that fuel cycle. So utilities largely have been able to do that. They can't do that anymore. There's no UF6. There's none. It doesn't exist in mobile inventory UF6, and the prices have skyrocketed for UF6. So a utility right now, what they're doing is they're taking their uncovered period. Let's say it's out 2027 plus, okay? Which sounds like a long time away, but it's not. They're figuring out with the enrichers in the West what the tails assays are going to be for those contracts. And that is going to kick out a number of how much uranium they need to buy. So you have to figure out that enrichment picture first, and then you go buy your uranium. That demand is coming to the uranium market. It's coming, and it's coming soon. That's why I think we're going to have a very, very strong seasonal period for uranium this year.
Interesting. So you painted what's happening today. Japan restarts, Bloomberg picking it up. You gave us the macro. You gave us a secondary. Where do we go from here? And how does the Sprott Trust fit into this landscape, given the environment that you just detailed?
That's a really good question. I think the Sprott Trust has kind of been left for dead the last few months. They've been trading at a pretty persistent discount to NAV. And today, actually, right now, with a few minutes left of trading, they actually went from a 10% discount to NAV as of yesterday's close to a premium to NAV today. That's how much it moved, and on pretty big volume as well. So anytime they're at a premium to NAV, they're issuing trust units into the market and raising cash and buying uranium. So we started to see the spot market move a little bit today. That probably was SPUT. How did the SPUT affect things? Okay, so when SPUT was when there was a lot of funds flowing into SPUT last year, so we're talking August, September, October, what happened was they were issuing trust units, raising so much cash and buying uranium so quickly that the spot price rose above the long-term price, or let's say even the midterm price. The market became backwardated, where you had, immediate demand was priced higher than mid and long-term demand. Okay, that's a backwardated market. And what happened was you had carry traders that had signed contracts with utilities. Okay, so if you're a carry trader, you might be selling uranium to a utility for 2023 to 2025 delivery, and you go and you buy uranium in the spot market and you cover that delivery, right? And you add a little bit of profit and a little bit of cost of capital. That's your business. That happened a lot over this past decade, and it's definitely slowed down because of this market. But you still have as of now, probably not that much, but a decent amount of uranium held in carry traders holding on to pounds for delivery into their contracts to utilities. What happened because of the backwardated market, carry traders were selling the pounds they were holding to Sprott and then covering their needs by going into the midterm market and getting pounds from Uzbekistan or Kazakhstan or whoever wanted to sell them midterm pounds at a midterm price that was lower than the spot price. This was known as the reverse carry trade or a carry trade unwind. This provided a lot of liquidity in the spot market, a lot of pounds to be able to be sold to SPUT during that period of time. So a lot of the money that came into SPUT was buying was this reverse carry trade. I think that we worked through most of that. So my point being, the next round of financial flows that come into SPUT, if they're able to raise a lot of cash and buy a lot of uranium, the spot market should be thinner because the buffer of that carry trade unwind is not going to be there, or is not going to be there in sufficient liquidity to keep a buffer on the price. So we could see some very, very strong moves to the upside if we see financial risk coming back on into this market and going after SPUT.
Beautiful. Exciting and interesting times. I think that was a pretty good wrap up. Any last things that you think I missed?
Well, I think I left a lot out on 30,000 foot view, but it's probably hours long of content. I think really kind of the underlying important part of this trade is it's actually kind of a feel good investment. You can feel good about investing in this. This is clean energy. There clearly is a clean energy revolution happening right now, and the energy crises that we're seeing across the globe is putting a big fat highlighter on uranium and on nuclear. So I think we're entering the early stages of what's going to be a global re-embracing of nuclear energy. There's guys like Josh Wolf who basically say that, if nuclear energy was discovered now, it would be the next big thing. And we'd be so excited that we had discovered this savior technology that can provide carbon-free baseload energy. And I think that the sentiment that has been negative for the past couple of decades, not only from things like 3 Mile Island and Fukushima, but obviously from the fossil fuel lobby that has been pushing for renewables. Yes, you heard that correctly. The fossil fuel lobby loves renewables. They love it. Now we're finally seeing that shift, and we're seeing a big shift towards nuclear. And that just kind of underpins all of these other, like the fuel cycle thing. You have to understand that. You have to understand where that demand is going to come from and when it's going to come. But underpinning all of that is just increasingly positive fundamentals and an embracing of nuclear going forward. And it's a very, very exciting trade.
For everyone listening, I'm going to link our last interview where Justin does pretty much a master class on the fuel cycle secondary market. So I'll link that down below so you can watch that. I will also link Uranium Insider newsletter right there down below. They have a fantastic quarterly option. We're clearly getting close to the lid blowing off. Will it blow off right now? Is there a little bit more wiggle room in the macroeconomic climate with recession interest rates? Who knows? We'll see. But we'll link that right there down below. It is better to be ready in a market like this than to be too late. So check out Uranium Insider and the quarterly option right there down below. If you enjoyed today's episode and you want to see some more stuff, some things that I missed, give us a comment or question right there down below. Be sure to source them for future episodes with Justin. Smash the like button, subscribe, bell notification, all that fun stuff. Send it out in the YouTube universe. And Justin, I want to thank you for coming on today. And is there anything else?
I don't think so. I mean, the last thing I might want to mention to your audience is that we do a members webinar every month. I already mentioned that. Last month's webinar, we had a gentleman named Per Jander. He's the director of WMC Energy. They are the guys that buy uranium for Sprott when Sprot's in the market. And so we did a 2-hour deep dive with Per Jander, and we went really, really deep into this overfeeding, underfeeding situation and understanding the fuel cycle, and had a fantastic Q&A with him. So anybody that's considering a membership, when you join, you get access to everything, all of our content from the past 3 years. So you can go right away and watch that 2-hour replay of last month's webinar and get a deep understanding of the fuel cycle and what's coming for uranium.
So we'll go ahead and link that right there down below. We want to thank you for watching, and we will see you next time.